Welcome to FMH Insurecast, a podcast created by Farmers Mutual Hail designed to deliver expertise and insights from trusted FMH team members and industry experts. Each new episode will dive into new products, industry updates, and innovative solutions. Let's get to today's topic.
Hello, everyone. Welcome to FMH Insurecast. I'm Dave DeCap, your host, coming at you from a different location, as you can see. Not in the studio today. I'm down at the crop insurance convention, specifically the NCIS convention today, learning a lot about what we can potentially expect going forward and about some of the decisions that yet to be made. But really here to host the biggest, usually the biggest, most viewed, most listened to, and in my opinion, I think the other folks on the call, the most important episodes of the year, because we're talking about the crop insurance decisions that need to be made for 2025. Particularly from a farmer and an agent standpoint, right? There's a lot of choices out there. There's always program changes. The FSA programs, you need to make a choice here in the upcoming weeks. The relationship between FSA programs and crop insurance. And we really need to know, need to narrow that down to say and see what we should be considering going into spring. And to do that, I have two experts on the show with me today. One gentleman needs no introduction. He's been on the last several, but we'll introduce you anyway, Ken Ripley, here in a sec. The other one's Derek Waters. Derek, I think this is your first time on FMH Insurecast. Yeah?
Actually, it's my second, Dave. I was on about a year ago discussing update materials. So we gave a little update preview for our spring update meetings, and we just recently wrapped those up last week.
So we've got another veteran, so that'll make this even better. But Derek, I'll let him introduce himself here pretty quick, and he is a regional trainer out of the Southeast, out of Kentucky. So would you guys, Ken, maybe you can start. Can you just give another brief introduction for those that maybe haven't caught the last few?
Yeah, so again, Ken Ripley, the North Region Regional Sales Manager for FMH, live up in Blue Earth, Minnesota, and also farm on the side. So always enjoy being on here with you, Dave.
Likewise. Mr. Waters, you could do the same.
Yep, Derek Waters. I'm a regional trainer, and I focus predominantly on the Southeast region of the U.S. So here today to provide a little bit of Southern flavor to the Insurecast episode today.
We can always use that, man. We can always use that. So let's jump right in. So for those of you that listened to the last couple podcasts, we've taken kind of the macro level, right? The election's just over. We've got a lot of you got the Relief Act that was just passed, economic disaster, things that are still need to be decided and to get done, right? So I like the way we spent covering that stuff. Then we had Chip Flory come on. We talked a lot about how these macro trends are really going to impact particularly crop insurance, but farmers in general down the road and ag in general. But this episode, we're making specific decisions, and there's so many factors that go into your crop insurance decision every year, let alone with these macro factors that are out there. So what we really want to do today is to dive into some of these things, see what agents and farmers across the country are using and leveraging and paying a lot of attention to as they make their decisions this year. And I think the best thing to do, maybe I'll start with you, Ken, is to open broad. What are you kind of seeing generally across your Northwest region, and what are you personally as a farmer thinking about? What are some of the big topics that are occupying your mind this time of year?
Yeah, so since the last time we met with Chip, a lot has changed from the grain side. Positively, we're seeing corn right now. We're tracking corn as of this day, and we're recording here on the 11th of February. We're seeing the price discovery for corn up in 468. I don't know if that'll hold today. We're down just a little bit today, but to be at or above where we ended last year is amazing on corn. Not quite the same case on soybeans, which is trading in the mid 1063 is where it was at yesterday for the close. So still a much better number than we were just 30 days ago. But having said that, what's going on or what I'm seeing in my region is lots of excitement and interest in ECO. As we've talked before, that product is just exploding. I don't know what percentage of sales are coming in with it, but it is more than I anticipated. And having some agencies saying that every one of their customers has bought it so far. So that is, growers are looking for high-end coverage, to answer your question. And also, from my personal standpoint, I followed my own medicine. I said I'd do my break evens. I've got those done.
All right.
I looked through that, and there's not a lot of areas a guy can cut. So it's just more buckle down, do a better job getting the proper coverage in place where you can, and then try not to overspend, which is always a hard thing to do as a farmer. So
It- can, can I ask you a follow up on that? That's something
yeah,
we've talked about in the last couple podcasts as well. Is the I'll call it advice, although it's not. It's never advice for everybody. But it's like, is the first place I look to cut, given the pressures on margins, is crop insurance one of those inputs I need to really consider cutting back on? And it sounds like, if I heard you right, that you went against that decision. You're like, well, I need the
yeah,
protection for my
yeah.
loan and everything down the road.
Yeah, and we're seeing that actually across the board in a lot of southern Minnesota, especially. We're seeing added people that have not historically bought like ECO in the past. Maybe they were buying an 80 or an 85 or adding ECO on because of that subsidy change. So we're seeing more folks saying, "Hey, I need to hedge a subsidized put. You let the subsidy help us as producers get more dollars of coverage." And that's been a major trend that's going on, at least in a heavy portion of my region. So yeah, it things have changed dramatically
Yeah,
in just 30 days. So
yeah, pretty amazing. So, Derek, same question to you. Are you noticing some of the same trends, particularly with ECO? But if so, and if not, what are some of the things that you're seeing from your area of the world?
Yeah, absolutely. I think weighing those input costs and what we're putting in work and we cut, I don't think we'll see as much new equipment sold here in the South as what we maybe have in the last few years. One thing that might be a little bit different here is we don't 85% coverages tend to be quite a bit pricier the further south you go. So we tend to see a lot lower level underlying policies. So the conversation has to be had before I look to ECO, for example. Do I need to maybe check it up in that underlying policy and then also evaluate the unit structure? Is enterprise by irrigation practice something that might be beneficial to me? Or I can take some of those premium dollars away from my irrigated and put it towards my higher risk area of the non-irrigated crop. So lots of those conversations going on. Then of course we're also getting into the ECO discussion as well, especially in rice. So last year, a lot of people took ECO. It was really its first entry into the Southeast last year in the rice crop. Didn't see the decline in price that we thought we would, but with those prices, we're right now at 20 cents on short grain and 14 on long. 69 cents on cotton, which is really low from a cotton standpoint. So that also goes into play with these conversations around these programs like ECO and stacks. And is the price at a level to where they offer the protection I need? But every agent is concerned about those producers cutting on their crop insurance, but I think pretty much the entire industry is on board with trying to keep those floors high, trying to protect those growers. So even if it may be a little bit of an uncertain year, we can enable them to stay in business going forward and hopefully be profitable.
No, that's good. And yes, of course, I'm in the crop insurance industry, but it's reassuring to hear that folks are not pulling back on the most important piece of the safety net, even given the financial pressures. And and this goes to both of you guys. So have you had any discussions with agents or potentially just farmers that you've met in the countryside, getting any different pressure from lenders this time of year? Or I know that's a big factor in making sure they have the appropriate protections, right? So those things go hand in hand. But are you experiencing anything unique along those lines?
yeah, I'll go first. That's definitely a concern in my region. I've had discussions just this week with agents that said, I've got some producers that may or may not be farming. If we don't get if we can't come together with getting the underlying their operating line in place, we need those guarantees to support it. And so getting those higher levels of coverage is critical. Without it, they just don't have the equity maybe to live another year, unfortunately, as far as
Yeah.
farming. So it's a concern, and I'm sure it's probably not any different for you, Derek, either.
Yeah, absolutely. Higher coverages, better guarantees, secure that uh, lending, secure that line of credit. And even the whole farm discussion has come up in conjunction with that underlying policy in a couple of instances. And that might not be something the agents want to hear, right? So it's a little bit different animal there when you get into the whole farm product, but that has actually popped up from a couple of lending institutions as a way to increase some of those coverage levels on a revenue basis.
Yeah, I'm hearing that as well. Even areas, especially in the wheat areas of my region, where sometimes wheat can be one of those crops that's just abused at the marketplace. There's always some deductions against it, where that whole farm gives you that extra security, kind of that umbrella coverage. So yeah, great point. It's not out of the equation. It's probably more of a hot topic in some of those wheat areas for my region.
Yeah, it sounds like wheat gets abused everywhere, Ken. We've seen a lot of those winter wheat acres convert to canola here in West Kentucky and West Tennessee.
Yeah.
Yeah, no, that's just to really to echo what you guys are saying. So I talked to a number of agents just this week, some that came down to the conference, and it kind of summarizes our whole discussion to this point where there's not, I mean, you would think, I thought going in, ECO is going to dominate the discussion, and it does. I mean, it is a factor in every discussion, but there is no one way that folks are approaching this from across. Well, one particular agent was from Western Nebraska. Another agent was from Indiana. Another agent a little further south in Arkansas, and just with those three examples, it really continues to vary significantly across the country what people are really talking about and interested in, given the volume of things that are kind of on the radar right now.
Mm-hmm. Yeah, absolutely.
Yeah. So let me shift gears a little bit of a surprise curveball to you guys, but it just occurs to me as we're talking so think about it from an agent perspective. Agents are obviously going out there and trying to do their best for the risk management plans of their existing customers. They're also in a growth business. They're trying to go grow their base to provide those products and services to more growers across the country so that they can continue to expand their business and provide that protection. Have you, either of you, this goes to both of you guys, any of you seen any agents having success finding new customers, providing more services to more people with any particular strategy? Just general knowledge, for example. I mean, that's obviously a huge boon to a customer being wooed by another agency. But have you seen anything like that for either of you?
Yeah, absolutely. And I really think that it's hard to pin it down to one thing, Dave. I would say just general knowledge, right? So you've got some agents that really maybe haven't learned enterprise by cropping practice, irrigation practice, et cetera, as well as others have. Maybe they don't understand how ECO works in conjunction with that underlying policy. So it seems like the agents, when times get tough, the agents that are able to customize, I mean, crop insurance has changed a lot. So just a few years ago, you had a handful of options. Now there are literally unlimited options available to you. So the agents that are able to adapt to that and pick up on all these new products and offerings and different ways we can set up things now, combine it in with some private products. There's just a lot that an agent can do. And the agents that tend to embrace maybe some of these newer options and endorsements and different ways of doing things tend to be seeing some of that growth, in my opinion.
Yeah, I'm going to echo that as well. One of the things that has definitely occurred this year in my region that I haven't seen, I mean, it's been prevalent, but this year especially, is how many agencies are out aggressive early. I've talked to numerous agents this week that are down to just a handful of customers left, and they have all their renewals done. We had agencies that were done before price discovery started, because farmers, they said there's a lot of farmers that were needing information earlier than ever. And so to their point now, hey, I get a lot of that business done, wrapped up. I got that opportunity to go out and prospect. So right. It's going to be interesting to see. I think there's going to be a fair amount of business that moves around this year just because people were out early. And in Minnesota, I mean, you probably had more snow in the south there, Derek, than I've had in Minnesota this year. So it's us northerners like to get out when the weather allows. So
Yeah.
That's
We've
good.
been really
Yeah.
lucky here on the Kentucky-Tennessee line, Ken. We've missed most of it, but now one of our agents down in Louisiana sent some pictures with 12 inches of snow on the ground,
Yeah.
and he's near Baton Rouge. So it's just insane to think about
Yeah.
all that
Yeah.
snow down on the Gulf Coast.
So here's one for you. Just a brief aside. To that point, one of the speakers at the conference down here said, you're in an interesting year when New Orleans, southern Louisiana, has more total snow than Chicago, Illinois.
Hmm.
And that is true this year, which you don't really think about it that way. You've had the weather down there, but it's like, yeah, that's like a one in a million, seems to me.
Yes.
Pretty funny. Well, not funny for everybody. Pretty interesting. Let's call it that.
Yeah.
Um, but Okay, so one more along those lines, just really quickly, just because I like to think about this, there's always surprises every year. So has an agent or a farmer talked to either of you guys with all the traveling and the conversations you've had, particularly with everybody getting things or a lot of people getting things done early? Is there a biggest surprise out there that either of you has seen and went, wow, that's something I didn't expect?
Hmm.
Putting
I
you
would
on the
say the
spot, I know.
Yeah, I would say the biggest one in the Delta probably goes back to that ECO on the rice. I think the commodity groups and pretty much everybody thought that ECO on rice for 24 was a sure thing.
Yeah,
And then we just the prices held pretty steady. So I think rice is definitely one of the things that was a bit of a surprise. And then uh, 69 cents on cotton. So kind of another one of those, a little bit of a surprise. It's pretty low. So you're starting off in the hole with 69-cent cotton. So yeah, definitely. I think the some of the prices maybe that have not gone down, and then some of the others that have been a little bit of a challenge for our southeastern agents this year.
Yeah, I think I'd echo the same thing. It's more price because, like I mentioned before, I did not anticipate us getting back to or above last year's corn price. That
good
just
point.
didn't seem in the
Yeah.
cards when we're hearing 300 bushel corn in the I states. I mean, how is that even a thing? So that's a very positive surprise.
We like
And like
those.
say, and hopefully that price being higher on the corn can keep the beans up. I mean, obviously we're not going to get back to last year's price on beans, but it's going to be an interesting year. We'll say that.
Yeah, yeah, no doubt. They're all interesting in their own way, right?
Hmm.
And there's always something that comes out of left field or is unexpected, and maybe that would be it for this year. Let's make it a good one, right?
Yeah, right.
So one thing we haven't touched on yet, and Ken, I'll start with you on this one. Um, it just kind of at a high level. So we've got the FSA program decisions that we need to consider right now, that everyone needs to consider, and some of them, depending on which direction you go, impact what crop insurance eligibility you have. Can you talk from your region, even personally as a grower yourself, you maybe some of the high points of the FSA programs this year?
Yeah, so probably the big thing to state on the call is that you definitely need to look at your county data. So County Arc is getting a lot of press, mainly because it's got a nice guarantee. For example, on corn, we got a 503
Mm,
spring price for corn on County Arc. Now that's an 86% policy, so that brings us down to like 433. So, and PLC is at that 426 for a floor price with PLC. So they're closer than one would think. But the thing that I found doing all the farmer meetings I've done so far is it really comes down to what is that county's prior 5 years actual yields. Because there are some counties where that unfortunately has not been good. So their APH, so to speak, for County Arc has been a struggle. Where like the county I'm in is had good year yields over the last prior 5 years. So we got a nice number. So we're probably leaning more towards the County Arc here than the PLC because of that. But so it's a year to wrap it up. It's a year where you just can't go with what the mainstream is saying. You need to dig into your numbers because there's cases where I've told producers, hey, it looks like ARC individual is the best thing for you. And I don't think I've said that since 2019 when we had all that prevent plant in South Dakota where it was a no-brainer to take ARC individual. So it's it's not a easy button decision this year is probably what I should say.
yeah, no, that's very interesting. I mean, when you talk about it like that, because it always feels like they're talked about kind of monolithically, right?
Yeah.
Yes, you want our county in your area of the world, and I'm interested in stacks from Derek's here in a sec. But it's so imperative. And you and I have talked offline. You've talked to our sales team several times about some of these things. It's very enlightening to to know what you should dig into and to know exactly where you need to go. And the decision seems to kind of present itself when you get the right numbers together, right? So it's like,
Hmm.
don't
Hmm.
just assume, dig into the numbers a little bit. You will find that it's worth it, it seems.
Yeah. Yeah. And there's tools out there to help you with that too. So you don't have to study all the materials and learn the rules. Just, seek them out.
Seek out the tools, right?
Hmm.
So Derek, from your side of the house, what do you think?
Yeah, I would just echo what Ken said there. Working with an agent looking at some counties in Kentucky. If you assume our crop insurance yields are pretty much maybe the legitimate, right? We've got the records, we've got the verifiable, lots of things going into those yields. In a lot of instances, we were seeing some counties in Kentucky that were 10 to 20% ahead of those crop insurance yields. And then doing the similar exercise in Mississippi, we were seeing a lot of those that were that much underneath what our crop
Hmm.
insurance county yields were. So yeah, absolutely. It's not a this is the right way to go. You got to look at that county. You got to make those decisions, and you got to do the math because it's. And of course, we'll get into in the next episode a little bit more with stacks, but with the cotton, even then, because they combine the lint and the cottonseed into that cottonseed number that you get off of the stack. So you got to do just a little bit more legwork there to make things apples to apples. But yeah, definitely insureds and agents alike need to be looking at those county numbers.
That's I'm glad both of you guys brought that up because I certainly didn't want to leave folks with that they have to do all the legwork themselves. So to Ken's point and Derek's yours too. So what type of tools are we talking about here? Is it something that they should talk with their agent about? Is it something that they should what would be the option here?
Yeah, so quite honestly, just do a Google search. You can find some great tools. For the northern states, there's a lot of nice stuff. Typically, Farm Doc is a
Farm
great
doc.
place to go to get a lot of that. I mean, heck, I've looked at the University of Michigan has got a great tool that's out there. So look at your state stuff first because they're going to be more honed into that region. And if you don't, then look at some of these, these nationals, the Farm Docs, the Texas
A&M.
A&Ms, some
Yeah,
of those
A&M's a big one.
that kind of do some nationwide discoveries. But if you can find something for your state, it's probably going to be honed in for what you need to look at locally.
Yeah, and don't forget about the quoter on the crop insurance side. So I had a lot of
Mhm.
these Delta agents that were like, all I ever quote's last year's coverage. You guys can talk about the templates, but I don't think that's anything that I want to take advantage of. And then now we're getting into the thick of things, and everybody's calling and saying, "Hey, one more time, I want to set this different special combo up. Can I?" Yeah, absolutely. We'll walk you through that. So yeah, don't forget the tools that we have available on the crop insurance side to counteract your research for
Yeah.
FSA programs.
Yeah. No, no, very, very good stuff. That makes a lot of sense. So now that we've taken it down kind of to a micro level, we've zoomed in a little bit. Let's back up again to discuss kind of takeaways or any other major trends or things that either of you guys are hearing in the countryside.
Not so much from a crop insurance side. One thing that's definitely being a very popular trend in my region, more from a efficiency side, both for producers and for agents, is we're seeing a huge uptick in interest in our precision side. So I just want to throw a plug in for that. That if you've got the data, and we've all, as a farmer hat on now, we've spent a lot of money on those tools, leveraging them one more time. I mean, that's been exciting and nice to see the number of producers, especially in southern Minnesota. We had a lot of losses, and people embrace that for their claims. And we're seeing a much higher uptick on the precision side. So, like I say, outside of coverages, something that I'm
Hmm.
seeing as a trend that is exciting from us from an FMH standpoint too.
Yeah, absolutely.
Yeah, and I would echo some of that as well. And maybe not as much from the agent side in the South, but actually the producers, right? Right. So agents calling up, and I've got a producer that would prefer to use these more accurate acreages in order to get their coverage in place. And then also, kind of another trend we've seen a little bit in the South is maybe a little bit of a resurgent back into some cotton or some corn and soybean acres in cotton country. So those cotton prices where they are, had several agents calling up saying, we haven't had any corn or beans in 3 or 4 years, can I still quote that? And how do I, you know, get that in place? APH databases are still intact, et cetera, et cetera. So might be it's hard to tell about the cotton guys. Sometimes it's kind of like where I'm from here, tobacco, you
Mm.
just grow tobacco, right? So a lot of these guys will ultimately fall back to cotton, but there is a trend of a lot of people looking to other crops just because of the pricing.
Yeah.
Mhm.
I can tell you that's a trend with a number of the speakers, the financial speakers, the professors, even some of the political speakers at these conferences are like, we're at the point now where, the pressure is so significant. There's some pretty major decisions being made on some operations. So something definitely to keep an eye on going forward into this and then certainly into next year. Um, so one thing, this being FMH Insurecast, I'd just like to ask you guys about, Derek, you brought up the quoter. So our quoter is affectionately called FMHQ. The Q stands for what you might think it stands for. It stands for quote. Um, but so has that tool, to Derek's point, have you seen a lot of significant response to that tool and it really helping agents position themselves better with their current and potentially new prospective customers?
Yeah, I can tell you, being on that team that helped develop the news tool, I'm so excited to hear all the awesome feedback we've gotten from agents. Some of the features that are in there that can help with our, for example, historical look back, being able to see how products that you've maybe not bought, how they would perform in a look back. That's been really exciting. And then also just because we're talking about profitability, the profit loss matrix that we've got built in, there's just some great tools to help, educate so you make that right decision, which is things we didn't have in the past. So it's exciting from my side. So I'm biased because spent a lot of time on that project. So I'm so happy to have,
Yeah.
not that it's perfect. We got tweaks we need to make to it, but boy, it's been fun. I'll say it's been a lot of fun. So
Yeah, absolutely. When you can take 2 weeks worth of work and drill it down to 90 seconds, I mean, that's just incredible to behold. So, I mean, if you wanted different combinations with SEO, ECO, and HipWe, for
mhm.
example, and our old setup, that was quite the project because, every single crop tab and you had to make all those changes and adjustments. Now you can just pop together a template and you can quote the whole book with it if you want. So it's yeah, definitely been a big improvement in the
Mhm.
Southeast.
Yeah. Yeah, and just to sum that up, everything I'm hearing is just very, very, very good. We're very excited about it from a company standpoint, and we're not done yet. To Ken's point, there's a lot more improvements, the future evolution that can happen to that, and we're just really glad the feedback has been so good so far. So,
Mhm.
all right, well, we're about at that time, fellas. Any main points, takeaways, calls to action for the listeners and viewers?
Yeah,
I
I'll
think we
go
did a
first.
great job at summarizing. So,
Yeah, yeah.
yeah,
No, I'm just going to say, just encourage farmers to, again, if they haven't done it, get those break evens together. That just makes that discussion with your agent and knowing what to buy that much easier. Because if you start with that baseline, you can customize the right plan after that. So that's what I'll leave from my side.
yeah,
Yep, that never grower is different, right? So everybody's going to be in a little bit different environment this year, and treat everybody individually. Do the legwork again, much easier with the tools that we have in the quoter and some of those tools we talked about with FSA programs. But I don't think this is the year where there's a blanket
Mhm.
concept that's going to suit everybody. It's definitely going to be very individualized this year. I think the agents that are willing to do that extra legwork for those producers are also going to see some gains in business this year.
Mhm.
yep. Well said. I'd agree completely. Broad brush isn't the solution. Never really was, but I mean, it could be a little bit in previous iterations, previous years, maybe going back a ways. But just given the volume of things that need to be considered, taking a very individual, very careful approach to it, as you guys both said, I definitely is the one thing to take away from this discussion. Um, okay, so Derek alluded to this. If savvy listeners caught it, we are going to we're going to close this episode up. But given the decision points in the FSA programs, we're going to follow this up with another episode very, very shortly that really digs into that a little bit more and I hope you all stay tuned for that. So be on the lookout for that. But to close this episode, I'd really like to thank Ken. I'd like to thank Derek. Really appreciate you guys taking time to come on Insurecast and discuss what you're seeing in your different areas of the country. And I just want to let everyone know to make sure that if you like this episode, if you like past ones, subscribe on your favorite podcast app, or certainly go to our YouTube channel and you can follow us along there. So stay tuned. Looking forward to the next episode, and thanks everybody for listening.
You've been listening to FMH Insurecast. We appreciate you joining us today and would like to hear from you. If you have questions about today's topic or an idea to share for an upcoming podcast, you can contact us at fmhpodcast@fmh.com. Thanks for listening. This podcast is intended for information purposes only. See policy provisions, terms, and conditions for details. Products underwritten by Farmers Mutual Hail Insurance Company of Iowa and its affiliates, West Des Moines, Iowa. Farmers Mutual Hail is an equal opportunity provider.